ain't take no love. I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year.
Yeah, good morning, everybody. Happy market Christmas Eve, I guess is what you would call this. Welcome to the morning show, our last show before Christmas. We got a little festive spirit going on today. Let's see, we have to talk about the Santa Claus rally since this is it. This is when it's supposed to start. So we'll talk about that, I'm sure. We have Louis Sykes joining us to talk crypto in a few minutes. We have Shane Murphy joining us at 9 to talk about charts that he likes. And we got you all in the chat. And I'm in a festive mood. What's not to like? It's Christmas Eve. Let's go.
Oh, happy Santa Claus rally period there, fellas. How do we feel about that? You guys are very festive today.
Yeah. Wait, you want to see what my sweater says?
I would love to.
It says, all I want for Christmas is more leverage.
Oh, that's good.
All I want.
Cute, clever.
Thank you.
Good.
See, it's a bull market Christmas, JC.
That's right.
What? Are you supposed to do it any different on a bull market Christmas? Do you eat different things?
I don't know what a bull market Christmas is. It's December 22nd. What does that even mean?
Christmas.
Oh, you're saying because today is our last show before Christmas.
Yeah.
Got it. So we're not shooting a Christmas morning show.
We're not, unless you want to.
Definitely not.
So yeah, that's what this is.
You open presents with the kids. I'm gonna go talk to these two knuckleheads about the market that's not even freaking open. That'll go well. So, all right. So today is officially the start of the old Santa Claus rally period. Contrary to popular belief, the Santa Claus rally does not start after Halloween. It does not start after Thanksgiving either. It's not a December thing. It's the last 5 days of the year, first 2 of the following year. Today is the first of those last 5 days of the trading year. And I saw some other stats that it was like, oh, from Christmas to New Year's, that's wrong too. So it's the last 5 days of the year, first 2 of the following year. So that begins today. Market average is about 1.3% on the S&P 500, which is exponentially greater than any other random 7-day period throughout the year. And it's less about, oh my God, we're going to buy stocks because it's the Santa Claus rally. That's not what we do around here. We're more interested if Santa doesn't show. So if stocks fall during this 7-day periods, that's usually a heads up that there's some underlying weakness underneath the surface.
So
we will most certainly be reevaluating come the beginning of the year.
So you'll be bearish if Santa doesn't come.
No. It would be evidence of something being wrong underneath the surface, which everything we've been seeing all year just continues to point to buy stocks, you idiot, right? Like all year. So that would be something that I would look for if that were to occur, that would just not add up. That would not make sense. Dollar strength would not make sense in an environment that we're buying stocks. Consumer staples outperforming. Again, not something that you would expect to see in an environment that investors are rewarded for buying stocks. Breadth deterioration. Again, something I would not expect to see in an environment that we're being rewarded for buying stocks. Now, to be clear, to your point yesterday, we're not seeing breadth deterioration, at least not yet. We will. That is a guarantee we will at some point. I just don't know when, and probably not anytime soon. No dollar strength, still making new lows. No relative strength out of consumer staples and low vol. They continue to make new relative lows. So those are the things I'm watching, right? There we go. New relative lows for consumer staples and low volatility stocks. And when all these drama queens, serious drama queens on Wednesday were freaking out because the stock market didn't go up for once, consumer staples and low vol were making new relative lows on Wednesday too. So if you are bearish for whatever reason, maybe you look at your charts upside down or maybe blindfolded, but if you have been bearish for whatever reason, you want these lines to go up, right?
All right, let's do state of the markets.
Hit it. All right, so let's take a step back and look at this seasonality, this 4-year cycle. This is the sweet spot. You know, this November, December period is supposed to be incredibly bullish for stocks. Obviously, it has been. So nothing to really talk about here, just kind of pretty normal. And then continuing to rally into January, right? That is the traditional seasonal trend. Markets have been following these seasonal trends pretty closely. And then maybe a correction into February or March. That would be pretty normal. Doesn't mean that we need to correct in February or March. It doesn't even mean we need to rally into January. I'm more interested in when the market ignores seasonal trends. So, for example, if the market is weak from now into next month, that would be a heads up that something's wrong. If the market is strong in February and into early March, that would be very interesting as well. That would reiterate underlying strength in the market when it's supposed to be weak. So that's how we use seasonality. We're much more interested when the market ignores seasonal trends. Obviously, as you've noticed, the market has not ignored seasonal trends. The market continues to follow those seasonal trends. And then this is the catalyst. Show them the dollar. This is it. Nothing else matters. Dollar up, stocks down. Dollar down, stocks up. That's it. Spencer, did you ever think it'd be this easy to make money in the market? That all you have to do is follow the dollar?
No, I never thought it would be this easy.
It's really that simple. Dollar down, stocks up. Dollar up, stocks down. Strazza, do we need to make it more complicated than that?
No, not really. No arguments here. I mean, you can pay attention to interest rates also, but based on the current relationship, they're going to move in the same direction.
Well, it is a little bit more complicated because dollar down, broad market index is up, but that doesn't really speak to what's happening under the surface, right?
Well, you're seeing a lot more strength than is being described in the media.
No, I'm just saying there's degrees of, there's just degrees of performance, right? So there's standard deviation, right, of winners and losers and outperformers and laggards. So
you're speaking of a little thing that we like to call dispersion.
Dispersion, good word, SAT word.
It's a good word. It's a good word. Yeah, some stocks are doing better than others. That's actually perfectly normal. I'm not really sure why I'm confused about that. I'm not saying you specifically, but people are like offended that some stocks are doing really well and some stocks are doing pretty well. Right?
Is it a stock picker's market?
We already had this conversation.
It's always a stock picker's market.
Ooh,
always.
Goody.
Always, because in a raging bull market, do you want to pick utility stocks? Or do you want to pick that small cap growth, son?
We talked about this yesterday. Spencer got a nice lesson on risk appetite and how we want our offense on the field, right?
Yes. Somebody asked us about it was a Brazilian water utility.
Oh, yeah.
JC.
Oh, yeah.
We might not be getting water utility requests on Chart Request Live for a while.
Right. Hey, for those who care about such things, we got a bunch of economic data about 10 minutes ago. We got PCE continuing to come down. That is, of course, the Fed's preferred inflation gauge.
What is a PCE? Can you explain to us, mere mortals, what
personal
a PCE is?
Consumption expenditures.
And how much of a lie is this usually? Like, how much is it?
That's not fair.
It's not about lying. It's just about
how bad of a guess is it usually? How about that?
Look, everything is a guess, right? Economics is an educated guess, right?
Well, price is not a guess. Okay. Price is fact.
JC, this isn't the jobs report. I'll just say that. It's not the jobs.
What does that mean? The jobs report, they lie more on that one?
Well, the jobs report is known for some heavy adjustments after the fact.
And this one's not?
Big revisions.
And this one's not?
No.
Nothing.
Because
personal consumption. So this is like a consumer thing.
Yes, exactly.
Well, I guess all inflation data is a consumer thing, right?
Is it?
Yeah.
No, some of it is producer.
I guess
the producer price index. See, I know that one.
Here's PCE coming down. This morning's number showed that continuing to happen. So
what does this mean? These are consumers are consuming less.
No. It means the prices, and it has to do. The reason this is different than CPI is because the basket's different, the formula is different, but it means that prices for things that consumers are buying are coming down.
But PCE, to be clear, like CPI, is all consumer facing.
Yes. This is a consumer facing index.
Okay. Yeah.
Yep. So.
All right. Is there anything interesting? This is boring me.
Okay. I just want to share.
No. It's good that you did that. There's like 4 people in the world that care.
I like a good Fred chart on a Friday.
Yeah.
Yeah.
No.
Did it make you happy? Are you guys thrilled that we got to show this shitty chart? Why does Fred have such shitty charts?
Well, it is important, again, because you like to talk a lot about the dollar. You can overlay a chart of interest rates from the October peak with Bitcoin or S&P 500, and the relationship is clear as day, right? So rates coming off the way they did the last 2 months has been a significant tailwind.
Throw slide 5. Throw slide 5 up there.
And if rates are going
people what they want.
If I said this like 2 months ago.
And if rates are going to come down more, inflation data needs to cooperate.
Right? And it is this morning, which is all good. All good things.
So this matters
good
to your market thesis, JC.
Good, but good for who? You said this number was good, but good for who?
Good for what I just described.
Good for stocks, man.
Rates down, dollar down, risk assets up. This number was good
for people who own stocks. So what about these fools with $6 trillion in money market? It's not good for them, or is it good for them too?
I think you're being hard on these people with the money market funds.
I mean, they make poor choices. So my bet is that humans are going to continue to make poor choices. And if people did it, if people weren't wrong so often, we wouldn't be so rich. Right?
I got something for you. It's not a poor choice for some people. Depending on your age and future, right, and what's going on in your life, locking up at 5% might be the right decision.
Dude, you sound like you sound like such an ignoramus right now.
No, that's the truth.
Okay, back out. Let's assume all of the retail money in money market funds is old grandmas that wanted to lock it in, like you just said. Okay, fine. Let's just assume that's right, even though we know it's not. Even though we know it's not. A lot of poor choices being made there. Nevertheless, now you got $4 trillion in institutional money market funds. How about them? You want to tell me about how, so good for them to lock in and miss out on 60% returns in technology? Why don't you tell me more about that? So
grandma puts her money into the money market, gets 5%. What you're gonna sit here and say, what a poor choice. She should be buying Bitcoin. That's
again, I don't give a shit about grandma or her poor choices. I'm talking about the $4 trillion in institutional money market funds, the most ever. Has nothing to do with grandma and her poor choices.
What if it's a grandma institution?
No, that's not a thing.
The level
you're telling me that these were good choices by these institutions? No. They listened to these assholes on the sell side that came into the year telling everybody that the market was going to go down. And as it turns out, it's the best year we've had this millennium. How about that?
The level was very steady for a long time, and then you can see it obviously go parabolic since the pandemic. But isn't part of this just a nature of higher rates? The money is gonna, of course, the money is gonna grow faster when it's getting paid 5%. 5% on a few $1 trillion is not nothing.
That scene in
as opposed to 0.5%.
You know that scene in Anchorman where Will Ferrell's all thirsty and he's like, "Milk was a bad choice." Remember?
Yes,
that's what this is.
Okay. Hey guys, big news from the sell side. Citi strategists warn of U.S. stocks pulling back, but say buy the dip. So I guess at Citigroup they haven't cut this department yet.
Hey, whoa, too soon.
Project Bora Bora, they call it.
Fun fact, as of yesterday, breaking news, total money market fund assets decreased by $16 billion, all the way down to $5.87 trillion. That's 2 weeks in a row of declining money market assets. However, last week, institutions still increased it. This week, institutionals decreased it. How about that? By $26 billion. So the unwind beginning now that we've had 2 weeks in a row of declining money markets, or is this just a little blip on the screen? At what point does it become a trend? Like, at what point are they like, oh, that was stupid, you idiots. We're going to get fired because we've been sitting in cash like a bunch of assholes in the middle of a raging bull market.
I'm going to answer your
like,
question.
At what point does this become a trend and a real unwind?
I'm going to answer your question with a question, which is, and we have Louis. Louis, I didn't even see you there. Hey, Louis. All right, we'll bring Louis on in a second.
It's a good question. It's a real question.
I'll answer your question with a question, which is, how much of these inflows into money market funds in the last few years is just simply a result of the fact that all this money got flooded into the system, and it wasn't just money market funds; it's the stock market, it's crypto, it's mortgage-backed securities, right? Like all this money came flooding in during the pandemic, and this is just the result of that. It's not people actively going into cash. Some of them are, I'm sure, but on a large scale,
these are humans. These are portfolio managers at institutions that are putting their money into cash, and now 2 weeks in a row, they're getting out of money market funds. How do we feel about that? I know Mitch is talking about for financial advisors, diversification. That's not who I'm talking about. That's fine. Grandma can, get her 5% before she gets run over by a reindeer or whatever. That's great. I'm talking about institutional flow into money market funds, which has very clearly been a bad decision. Bad decision.
Could just be a demographics thing.
So I will ask again, at what point do these outflows become a trend? Strazza, this is a legit question. It's 2 weeks in a row. Is it 4 weeks? Is it 10 weeks?
4 weeks. Call me at 4 weeks, Steve.
4 weeks in a row of outflows. Strazza, is that good? I think that's probably pretty good. I would agree with that.
When is Todd Stone coming on next? He'll entertain this.
In 2 weeks.
I don't know the answer, JC.
Are you not entertained?
I'm not a fund flow expert, right? So if money's coming out of money market, great. Maybe it's going into the stock market. Maybe. Again,
where's it going?
That said, we'll see it in terms of fund flow. You'll see it. Bukowski, you see it. You see it in the prices. Great. So maybe money's coming from the money market. Fantastic. I don't really care so much where it's coming from, as long as it keeps going into the riskiest assets.
Yeah, but but money doesn't just appear and disappear. It goes from one to another. It's a flow, right? It doesn't just disappear. So if you're looking for a catalyst of higher stock prices, isn't record amounts of cash one of those catalysts?
Well, when the Fed's easing, doesn't money just kind of appear?
That's what I just said. Okay. Crypto Fridays. Louis, are you here? Louis here. Okay.
Lou, dog.
Got my fingers on the pulse, avocado and toast, leather seats, jet plane, always ready to go.
Hey guys, I love the sweater to kickstart the Santa Claus rally there, Spencer.
Thank you.
Does Santa Claus go to New Zealand?
First,
I'm not sure. There's not much sentiment work that's done on the New Zealand market. I'd hope so.
No. Like different countries, they have different characters. Like when my parents were in Cuba back in the day, the three kings would come and deliver presents, and then my mom, 7 years old, moves to Christmas, and she's like, "Who's the Santa Claus guy that everyone's talking about?"
Are you asking Louis if they have Christmas in New Zealand?
If they have Santa Claus?
Okay.
Do they have Santa Claus?
This was last week when you were asking if we have tacos. Like,
that's right. This is the theme. Every time you come on, we ask questions about New Zealand.
Wasn't Santa Claus the result of a Coca-Cola marketing campaign? I think I learned that in college.
Like the Brits are into like Father Christmas, right?
So things that we've learned.
We got a fat guy to really represent good old Americans, right, Louis?
Let's recap things that we've learned from this segment with Louis coming on the show. They do have tacos in New Zealand. They definitely have.
Yeah, but they're not very good because they don't have Mexicans there.
They don't have Mexicans there. Okay, no Mexicans. Avocado toast, yes.
More sheep than humans.
Christmas and Santa Claus.
All right.
Right?
I would have said no Santa. That would have been my guess.
Okay. All right. Well.
Anyway, Louis brought some charts along. Louis, let's talk crypto. What's on your mind?
Louis, are they mooning? Are they mooning yet?
And what is the definition of mooning?
Hey, you're on mute, son. Are you going to let us know when they start mooning? Uh-oh. Spencer, audio problems.
Wait, I don't understand. Wait, what'd you do? We just had you.
Yeah, just refresh it. Just go refresh it.
Don't touch anything.
Stop touching things. I don't have mics that work in New Zealand. Come on, what is this?
Louis, refresh your browser and check your connection. I don't know. That's weird. Here. All right. Well, while he does that, we discussed mooning yesterday. Did we not? We talked about this.
By the way, the population of New Zealand is 5 million. 5 million. That's like one Brooklyn neighborhood.
I want a New Zealand fun fact for this segment every Friday.
New Zealand Pinot Noir is delicious from the South Island.
Louis, I've been thinking about this since last night while I was looking through my crypto charts in the middle of the night. Are they mooning yet?
Well, what's the technical definition of mooning?
I don't know.
Right, that's what I want to know. What is the technical definition of mooning? Is an all-time high a moon? It's not mooning until it's an all-time high.
Oh, wow.
Or is it whether it goes parabolic, whether it hits all-time highs?
Like I'm on the phone with Strazza yesterday. He's like, my Solana's moving. Don't worry about me. I'm like, oh, excuse me.
Well, hey, we're talking to the chief YOLO officer of All Star Charts here.
Chief YOLO officer. If the chief YOLO officer isn't irresponsibly long Solana, then what kind of half-assed chief YOLO officer is that?
We wouldn't be doing our jobs.
We wouldn't be doing our job. That's right. You're staying true to who you are.
I think we should like make like a RSI script for the mooning. Like RSI 95, that's mooning. No?
95. That's aggressive.
93? I mean, what does it take for a moon?
If we're going to go RSI for a mooning definition, then it's got to be 90.
I think we almost need to change the calculations of what's considered overbought.
The top decile, right?
What one?
I feel like every small rally. I do breadth work, right, in crypto, and so every small rally, you get a significant spike in the amount of coins hitting oversold conditions. And so at the moment, the amount of coins that are in a bullish RSI regime, obviously, we've had an impressive rally, but it's at 100%, 100% of our universe.
That's a lot of percent.
That is a lot of percent.
I think RSI 90 is too low for the moon.
Really?
Yeah.
That's
but if you're setting it too high, then you're never going to be able to say mooning,
But it should be a rare thing.
Not in crypto.
I'll give it some thought.
Yeah, we'll give it some thought. This is what Strazza thinks about at night. So let's just give a quick rundown as to what's going on in the market quickly. Dow futures down 60 points, about 17 basis points. S&P futures up 10 handles, 20 bips. NASDAQ futures up 30 basis points, about 46 points. 30-year futures, bond market up again with the stock market. It's almost like if they're positively correlated. Gold up 1.5%. Silver up almost 1%. Copper up a tiny bit, almost flat. Crude oil up 1.3%. And the dollar down again. And with the dollar down, take a look at what's going on in the old funny money. You got Bitcoin flat, Ethereum up 3%, Solana flat, Injective Protocol going through a little bit of a correction, Doge flat, RNDR up 3%, ETH Classic up 5%. All right.
What? And so that's an important point again that we continue to reiterate, is that the important element here to this discussion when we're talking about crypto is that the correlation is still there with markets. If you overlay ETH with ARK,
throw that chart up. That's a good chart.
And mooning has nothing to do with social sentiment. Mooning is straight price.
Throw up slide 12. No, Spencer. Slide 12, bro.
I got to be careful when I drink my coffee and read these comments in the chat sometimes. I'm going to choke one day because you guys just make me laugh. Ah, look at this.
Tell me these two don't look similar.
Is it a crypto pickers market?
Yeah.
Crypto pickers market. Oh God. We're bringing dumb sayings over into crypto now.
That's right. Somebody's got to do it.
Yeah.
But look. If
Doug likes British accents. Do they have Brits in New Zealand? No.
Oh my God.
Do they have British accents in New Zealand?
Who has the nicer accent?
To be fair, the New Zealand accent does sound quite familiar to the British accent.
Do you guys grow a lot of kiwis?
Oh my God.
This is a serious question. Are you close enough to the equator? No.
This is like the stupid question part of the show, right?
I know, because we're just dumb Americans that are trying to learn about New Zealand.
Kind of having fun, though.
You guys are Santa Claus?
You're the only person we know from there, so we have to ask you.
Yes,
bro. We grow Kiwi fruit.
We grow kiwi fruit.
Do you grow kiwi fruit?
Yeah, but
that's good.
particularly in the northern regions.
Oh yeah, closer to the equator. That makes sense.
Yeah.
Yeah, no, I like it. I like it. Kiwi's the king of the north.
Isn't kiwi like a bird though?
You guys are
No?
killing me right now.
Louis like I'm never coming back.
Okay,
Bye,
we're
guys.
moving
I'm
on.
done.
We're moving on. We're
Moving on.
talking about crypto. You guys, oh my god. Okay.
Louis, why do you think ETH and the old ARK are moving closer than perhaps other cryptocurrencies with ARK?
Ooh,
That's a great question. I'm not 100%.
I'm coming in with the good questions today.
Well, that was the first good question, so you're moving in the right direction.
All right.
And so, if you look at a lot of the speculative growth in tech, they're forming these long-term reversal patterns. And the same thing applies in crypto. And it's really just buying those breakouts from those reversal patterns. It's a good strategy. Look at Marathon. Marathon is up really nicely, following that breakout. Obviously, names like Coinbase, Helium,
Right, but why is ARK and ETH in particular look closer? Like the underperformance is probably what I'm alluding to here.
ETH is a laggard, yeah.
Yeah, ETH is a laggard, and ARK, as we know, has been too.
If you take ARK's best components and overlay it with a Solana, those would look similar too. Right? No?
I'm not sure. I'm
Just
really
saying.
interested in
Yeah.
I'm really interested in the underperformance in ARK compared to other growth areas and the underperformance of Ethereum compared to other cryptocurrencies,
ARK's not underperforming.
Eh,
ARK's completing reversal patterns versus the broader market.
it's sure taking its sweet time.
Yes, it has, but a lot of these bases are just going now. ARK's no different.
But let's put it into perspective. The ETH BTC ratio, again, at those lows, while it has been chopping around that support level, it's a logical place to see ETH dig in here, particularly.
Well, you're seeing it over the last couple of days, right? You're seeing an interesting reversal in the ETH BTC.
A nice RSI divergence there at that support level.
So is that it? The flippening now resumes?
I don't know, man. I don't know. Maybe this is the cycle that we get it.
I think. I mean, I'm not going to fight that. I mean, I'm with you. I think ETH gets a turn now.
You do? That's a big call.
There's zero evidence.
Isn't that big of a call? It's a long-term uptrend. It's consolidated and done this crap for a long time. We're at key former support levels, bullish momentum divergence. Are you going to short this ratio here? I wouldn't. Definitely not. I think this is where you buy. I think this is where you buy another CryptoPunk.
Is it because they're priced in ETH?
Do they have CryptoPunks in New Zealand? Yeah, they're priced in ETH. So it moves with ETH.
Okay.
I've noticed when I see the floor price moving, when ETH is mooning, CryptoPunks are mooning, and vice versa.
So does ETH's relative weakness have something to do with Solana's relative strength? Like, is that a zero-sum game between Solana and Ethereum? I don't understand.
I really do think that is the case. I think that's a really good point. Instead of seeing that money rotate into Ethereum, you're seeing it rotate into Solana, particularly at this point in the cycle.
Okay. And can you high level why that is?
Again, the fundamental picture, I don't give much attention to, and so again, I follow money flow.
All right. So ETH or Solana? You would think ETH gets up off the ground, starts working here soon. It's right at that base breakout level. Still a great entry. Can you tell me what this Ethereum Jerome Powell coin is?
The what?
Yeah, so the not quite Jerome Powell, but the Ethereum proof of work is the proof of work fork from
Ethereum Powell.
Yeah.
Oh, so it's the proof of work. So it has nothing to do with Jerome.
Pow.
Throw the Powell, Spencer.
Throw up the Powell.
Pow.
And so that's about a $300 million market cap. And so this is the fork when obviously the merge happened, and ETH went to proof of stake, and so the residual project that was left behind was ETH proof of work. So if we put up the chart there,
wait, which chart is this?
The
Powell.
Ethereum, the Ethereum Powell.
Slide 14.
Come on, Spencer.
on,
You have
Spencer.
one job.
Oh, the one that says "pow." Got it. Okay.
There we go.
Spencer's so focused on real assets that he's just not able to follow all the funny money.
And so again, it's formed a nice little flag, nice little pennant here.
RSI is a derivative of price. Just want to throw that out there for the chat. RSI is price.
Yeah, is anybody arguing otherwise?
Seems to be some confusion.
Yeah, RSI is a derivative of price. It's 100% of the formula is price.
And so trade of the day, I want to quickly move on to optimism. So I provided that chart as the gray one. Ticker symbol
I like
OP.
this one. So do we buy this base breakout?
I think you do. I think you buy it every day of the week. It's
OPP.
all-time highs.
Are you down with OPP?
Yeah, throw up the optimism. This
Do
is
they listen to Naughty by Nature in New Zealand? Definitely.
You're
You know,
killing
he
me,
listens
bro. You're killing me.
Louis listens to a lot of hip hop, actually. So I'm
I do.
very impressed with Louis'.
Hey, I can't wait to come to New York as well.
Hey, listen.
I'm gonna take you to all those neighborhoods that they sing about in the songs. I'm just gonna leave you there.
All right,
I
listen.
love it.
I'm trying to find. Stop with the rap music. I'm trying to find the next injective protocol. Okay, I want which one's going to moon next? This one looks like a good candidate. The relative strength has been really nice.
Above what's that? About 350?
And then
You
Lou
buy
Dog,
that.
what? And then what is this? Out of curiosity.
I think it's similar to like your Solanas of the world. Another one of those competitors.
I want you
Again,
to.
I'm not 100% sure. I follow money flow.
No, this is a big one. This is 2.7 billion market cap, 32nd largest cryptocurrency for those keeping score at home.
I need you to know more about what these cryptos do. Somebody has to tell me. What happened
Do you really care? Do you really care, Strazza?
Yeah, it's fun to know. What happened to that website that used to summarize them? Or wasn't there like a YouTuber who did like those short videos? What was that, JC? Remember?
No, you can go to CoinMarketCap and you'll have the descriptions.
Yeah, but wasn't there like a guy who did nice YouTube videos with like short summaries?
That was in the last cycle.
Well,
I don't know.
Optimism. OP is a layer 2 blockchain on top of Ethereum. Optimism benefits from the security of Ethereum mainnet and helps scale the Ethereum ecosystem by using optimistic rollups. This means transactions are trustlessly recorded on Optimism, but ultimately secured on Ethereum.
In other words,
Sounds good to me.
In other words,
I still have no idea. In other words,
okay. All right, guys. Louis, we got it. We got to go. We got our next guest here. Louis Sykes, guys. Follow him on
what's
Twitter.
the trade? Lou Dog, what's the trade?
Oh yeah, sorry. Finish
Long optimism above 350.
So buy the breakout.
Buy the breakout every day.
When you talk about shit coins, this is not that. This is less shitty than other shit coins. It's way up the top scale. 2.7 billion. That's like a real company.
Highs. What crypto can you say is at all-time highs?
Injective protocol.
That's about it.
Right.
TIA, the TIA.
Okay. One of my favorites.
His point is it's hard to find cryptos making new all-time highs.
Solana.
Maybe we should take a look and keep an eye on the ones making new all-time highs. Right, Lou Dog?
I agree.
Good.
Right.
Dude, does everybody in New Zealand have...
I appreciate you, JC, for asking me some stupid questions.
Hold on. Does everybody in New Zealand have as good hair as you do? Or are you like, do you stand out there?
I need to star in some shampoo commercials, I think.
Do a lot of people have good hair in New Zealand?
All right, okay, we're ending it there.
All right, Louis, Merry
You're
Christmas,
gonna
man.
slay.
And also, Louis out next week. So a Happy New Year. We'll see you again in the new year.
Love you,
Sounds
Louis.
good, guys. You guys have a great Christmas.
All right.
Adios.
Later.
All right. We got Shane Murphy here, and we've kept him waiting. Let's bring him on.
Let's do it. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Shane in the house.
JC, Steve,
Come on,
Spencer,
man.
what's going on, guys?
Shane Murphy. It's a Christmas miracle.
Oh,
This is great. What a treat. How's it going, man?
It's good, man. It's good. Gearing up for year end. A little quiet at the office this morning, so no complaints here.
We should all go to the Miami Syracuse game They play in Syracuse next fall. We should go. You down,
Oh, yeah.
Strazza?
That would be fun.
You guys down?
What do you think about Syracuse picked up a new coach this year?
Wait, what happened to Boeheim?
Oh, no. This is Syracuse
Well,
football.
Boeheim retired, man.
We're talking about football.
Different
I know.
sports, Steve. Different sports.
Strazza's from
We're talking about
Connecticut. He doesn't
football.
realize that there's a whole world outside of women's
Oh.
basketball.
Okay. Yeah, I would rather go see them play basketball.
Yeah, no.
Um,
But Syracuse football, they picked up I believe it was a assistant for Georgia. I want to say they picked up.
Oh wait, no, it was the guy. Oh, didn't Syracuse just get the Ohio State quarterback?
They did.
Wow.
So this new head coach is the real deal when it comes to
get.
recruiting. So looks like
is
they're.
Tommy DeVito the most popular professional quarterback since Donovan McNabb?
He might be. He might be. Have you seen those pictures of him and his agent with the?
Ridiculous.
Oh yeah.
Dude, I was supposed to be on Liz Clayman's show earlier this week, and I got bumped, and I did Charles Payne's show. Tommy DeVito's agent was on Liz's show. I would have run into him in the green room.
Oh man.
Oh, that would have been
But
so
that's not why you
sick.
got bumped, right? That's not why you got bumped.
I don't really even know.
Oh, you
Okay.
got bumps for Tommy DeVito. It's a crazy.
No,
New York
his
City.
agent.
Yeah, I know. Sean Castellato.
Is that his name?
What
course it
a
is.
great name.
Classic.
Anyway, Shane, what do you got for us?
Yeah, so I guess a good place to start would be, in my view, the most important chart in the world right now, right?
Wow. Okay.
Russell
Okay.
2000 small caps. We're looking at small caps.
Wow.
That's
Most important chart in the world.
absolutely. If we want one chart to gauge risk appetite and understand how investors are feeling about risk assets, about stocks, it's this chart. And the fact that we're making a pretty clear move above a very well-defined range, that tells me a lot of information. So I feel like this has been a long time coming. A lot of the macro technicians or macro managers expected or anticipated small caps to have a good stretch of performance this year, given just the point in the cycle that many of us believe we are in. And that did not materialize up until November. This stretch of, the last 30, 45 days in small caps has been just, amazing. It's signaling increased risk appetite for stocks. It's tough to not be bullish the market as a whole when we see a small cap index like this breaking out to new highs. So very optimistic on this chart.
And
What about relative?
Relative, there's still some work to do, right? The RS chart looked a lot better, I want to say, like maybe 12 or 18 months ago. At least it put in a formation that it may have been basing or bottoming relative to large caps. But, we broke down to new lows during 2023. And there's still some work to do on the RS chart. But on an absolute basis, this chart just means a lot. I feel like this is the market telling us something that, investors are risk on.
I think.
How
it's
about this?
cool.
How about this one? Is this it?
Yeah. Still some work to do, but definitely, better than what we saw over these last few months. But we'll have to see if this.
I think this is the more important than the absolute. What do you think about that?
Relative strength, RS chart work is part of my process. But I do view it as a data point. At the end of the day, it's the absolute price that pays our clients. So definitely something to keep an eye on. But I'd have to disagree with you there, JC. I think the absolute price chart is more important.
Fine. And I'm not going to listen. At the end of the day, we're splitting hairs here. But I bet you would agree that this could potentially be a major driver to that absolute chart, is that unwind.
I would agree with that. And we've seen that, right? So look at equal weight S&P 500 year-to-date performance path. Up until the end of October, we were in the red year-to-date. And then in just, 30 days, 45 days, we're up, plus 12% in the equal weight S&P. That is a remarkable move. And, obviously equal weight S&P, that translates to, to small caps picking up the pace as well.
Remember everybody was a equal weight index expert.
I think it's important to point out that this move in small caps was sparked off of multi-year lows just in October. Not only on an absolute basis, right? We undercut the lows of the range, then we ripped higher. So you got a nice little shakeout and then go. Also in the relative trend, multi-year lows. Now JC just showed it with the oops hooking higher. This is how big moves are kind of born with these little failed breaks. So seeing it again.
Right. Absolutely. It's I interpret it in really one way, and that's risk appetite, right? Speculative small cap issues, making new highs. Investors want to own stocks. If I just end it there, I feel like keeping it simple like that certainly translates into, more constructive thinking and better performance. So I'm right there with you.
I'm hearing a lot about like rotation to small caps. Isn't it almost more just a broadening of the rally? It's like other things didn't stop working. Now we're just seeing other groups join the party, whether it's small caps, value
It's not
groups.
the rotation into small caps, Strazza. It's a sector rotation. Small caps had already been working all year. Small cap industrials were making new all-time highs. Small cap tech, small cap discretionary, all of these were working. It was the banks and the biotechs holding it back.
Right.
No, it's not, because it's not rotating out of tech. It's just rotating down the cap scale within.
No, it
tech.
is rotating. It is rotating out of tech.
Well,
No,
what about this,
Definitely is.
Steve? What about energy? Right, we've seen commodities and equal weight energy, large cap energy, sort of take a breather. I wouldn't say the trends there are broken by any stretch, especially just in your general or broad commodity index.
Tech peaked on a relative basis when that rotation that he's talking about picked up into equal weight into small caps.
You're looking at Microsoft and Apple. You're using the wrong index. Okay. ARK is over here making new absolute and relative highs. Are those not tech stocks?
Some of them are.
They're all tech stocks.
No, they're not. Tesla's a consumer discretionary stock.
It's a tech stock. Tesla's a tech stock.
All right. Well, you can make up your own rules in your head if you want.
My point is they're not rotating out of sectors. It's sector.
Yes, they are.
They're moving into small caps and into riskier stocks. Some of them are value. Some of them are still growth.
They're rotating out, bro. I love you, Strazza. They're rotating out, bro.
Shane, help me out here.
Tell them. School them, Shane.
I see where both of you are coming from, right? JC, your point on industrials and a few of the small cap sectors working, and the fact that maybe those areas hadn't had much influence on the broader index. I think that makes a lot of sense. It's not that small caps as a whole hadn't been working. It's just that there were some sectors weighing the asset class down. But as far as rotation goes, I still get hung up on. I feel like energy hasn't been a story or a focus for a lot of investors over this last quarter. And,
oil and gas.
Right.
Coal and uranium keep working.
Right. And palladium even had a pretty decent move over the last couple of months. But in looking at energy, it wasn't too long ago where that was still one of the leading, year-to-date sectors. The very, I guess, focused on and investors were interested in that sector, right? So if that were to play out in tech, if we see continued, tech takes a continued breather and we see some of these other sectors participate, I think that would be completely healthy, right? Tech's had such a strong year. It wouldn't surprise me in the slightest if we saw them take a breather throughout at least the first half of 24.
Does the Russell 2000 outperform the large cap major averages next year?
If I had to pick if I had to say yes or no on that, I would assume yes, just given the year that we've had in 23. Going into 24, I think equal weight style, indices are going to benefit more than cap weighted. That would be my view, just given the wide gap between those two through 2023. I would assume that resolves in favor of the equal weight in the small caps.
I'm totally with you. I think it kind of needs to, right? Because if they don't outperform, that performance gap widens. I don't know.
Mm-hmm.
Remember, large caps and technology outperformed the entire back half of the 90s. So just because they outperformed this year doesn't mean they can't outperform for the next 4 years, right? You know what I'm saying? So, keep that in mind too. There's nothing wrong with that.
Right. No, it's it's interesting. We're to move away slightly from the technicals, right? If we're looking at just the change in earnings expectations for next year, I think that has more heavily hit tech than any other sector, given the AI boom and just a lot of optimism, a lot of, that hurdle is now moved up a few notches, right? So the risk of disappointment and the risk of the market not being super, enthusiastic about earnings results in technology is much higher than other sectors. So that's something that is sort of sitting in the back of my mind as well.
Well, it could be mind-blowing to people when you tell them the, S&P 500 index attribution from the Magnificent Seven, right? But then if you show them the earnings attribution to the S&P 500, makes a lot more sense, doesn't it?
That's so true. That is so true. We'll have to see. I feel like a lot of these new business lines, especially in some of the smaller companies that are just trying to get into this new AI space because they see what it could bring to their productivity and to their bottom line. Who knows how much of that investment is going to be realized, right? This whole space 12 months from now can look a lot different. So, I'm cautious at any company who's throwing too much at it. The big guys, they'll be fine no matter what, right? But
they're going to take their shots.
Right. They'll be fine no matter what. But
Shane, you mentioned energy. What about precious metals? Gold pushing up against new all-time highs here. You like it?
Yeah, gold, it's it never disappoints. Whenever I find myself excited about gold, I am always proven to be incorrect, or I was too early. So I don't really have a
But how old are you, Shane?
What he's saying is it never disappoints because it always disappoints.
Right. It never disappoints. Disappointment, right? Shane, how old are you?
I'm 29 years old.
You're 29 years old. So, in the last gold bull market, you were, I don't know, you weren't even into girls yet.
Correct.
So there was a time, where gold consistently disappointed the bears. Went up for a long time, outperformed S&Ps even in an S&P stock market bull market.
JC's very nostalgic about his early career gold bug times, right? You miss those days.
You 29. Damn.
Yeah. When it comes to commodities, though, I'm in the camp of just basketing them. If we want to own a commodity, it's going to be from like a trend following perspective, and it's never going to be too big of a position, right? So, if we're going to buy and hold through different cycles, owning a basket of them always makes more sense. It's that whole, turning water into wine scenario, right? Where gold on a standalone basis through history hasn't really done much over the risk-free rate. But when we put it into a basket and we rebalance and we add other, types of metals and agricultural commodities, it tends to, benefit, investors. So,
and
it's
just
tough.
To be clear, Shane's talking about for clients for his advisory, right? So not the chief YOLO officer that is one Steve Strazza, right? Different objectives, right?
Shane, does your compliance department allow you to YOLO cryptos personally?
They do not. We do not buy crypto. We don't even provide a opinion or recommendation on it, really.
Why?
Don't say crypto.
We're still so early innings. What I see work for clients, and I think this is a story that resonates with a lot of folks. It's focusing on the companies that are in the space that are gonna benefit if crypto continues to move in the direction it has. That is sort of the way that we'll gain exposure to it. That could change, but for now, that's going to be our focus.
So this is not an uncommon policy, right? At RIAs to just completely not participate in the spot crypto markets. Does that just mean more money flows for things like Coinbase and MicroStrategy and some of these Bitcoin miners?
That is actually a really good point. I would assume so. If that's the where the flow and where the where these companies are pointing their directing their energy, I think that could definitely translate into flows into those names.
So how will you guys treat the spot ETFs when they come out? Won't touch those either, right?
We'll have to see. I wouldn't be able to speak on it, but that'll be something that I'm sure compliance is taking a hard look at and trying to get sorted. But if you look over the last 2 years, right, I don't think the compliance department of various RIAs were incorrect or wrong for putting or implementing this policy, right? I mean, look at what's happened in the crypto space. There's been a lot of meltdowns. There's been, FTX, all of this stuff, right? We're trying to protect clients from, getting too excited and wanting to, put too much exposure on an asset class that's still so young. Right.
Got to do it.
1.6 trillion in market cap. That's 300 billion more than the market cap of silver.
Yeah, but look at the volatility of it, right? That market cap could change by the time I finish this sentence.
Listen, for a long time, crypto was a lot less volatile than the stock market and the bond market, for that matter. Like Strazza was joking that cryptos are boring, so he's going to start trading bonds. Like that was like the joke.
Right. It's here to stay. I'm not here to tell you that it's not going to be around 10, 20, 30 years from now. It's more just we're still so early in figuring it out. And,
are you YOLOing personally?
No, I don't trade crypto.
Not yet.
Put everybody who's interested in the Coinbase. That's the winner. Winner. As long as the space grows, I mean, these guys dominate. You can stake the Cosmos for 10% on Coinbase.
Yeah, that's sustainable.
That's
Shane,
an MLP yield.
What are your clients? I imagine you're having some year-end conversations maybe with investors and things like that. Not crypto or gold or anything like that. Just generally speaking, what are the types of concerns? I'm particularly interested in the concerns that they're coming to you, or the optimism. Right? Is it one or the other? Is it both?
Yeah, a little bit of both. I think through the year, the main concern or the main disappointment would be on the bond side, right? So when we're managing balanced portfolios, our view is that bonds deserve, a place at the table. Depending on the environment, it could be less than what we've seen historically. For example, a 60-40 may only have, 25 or 30% fixed income. But bonds have had a really tough year, really tough 2 years. So having the conversation around how these bond funds work, how they're different from individual bonds, what interest rate risk really is and how it translates to their bond holdings, that's been, where we've directed a lot of our energy. But so far in Q4 this year, right, seeing bonds sort of rebound and start to participate alongside stocks. We've seen clients that are very happy with their month-end statements, right? They're able to see that bond portion is starting to pick up the pace. It's paying out a higher dividend. And they were able to get through the year, which for the most part was uncomfortable, right, for the fixed income side, but they were able to get through it and feel good about their investment. So these last couple of weeks, though, guys, the focus really has been, tax loss harvesting, making sure that our non-qualified accounts, we're taking advantage of, muni bond funds that may have a strong or very, very strong unrealized loss and exchanging it into something that, comparable and similar types of duration and credit risk. But,
Can you talk a little more about what exactly is tax loss harvesting? Are you just selling the worst ones, or once you sell your losers, then you have losses? Don't you want to have gains to offset against, or gains so that the losses can offset them? Right. So aren't we selling the best ones and the winners at the same time when we're tax loss harvesting?
It really depends on the client. It depends on the portfolio. We have some clients who maybe inherited shares and they're a very low cost basis. And so let's say, for example, a position in Microsoft becomes very, very big relative to their aggregate financial assets. And it becomes our job to say, okay, on a year through year, let's look for losses so that we could, harvest those and then reduce the Microsoft position, have it offset. For a lot of our tax aware models, it's just, doing the next right thing, which is, hey, if we're coming into year end and our, national muni bond fund in the model is at an unrealized loss, let's swap it with a different, low cost, passive muni bond ETF, right? So it really depends on the client, depends on their portfolio.
I think it's interesting, just amid all this tax loss harvesting going on past few weeks, the worst stocks, the most beat up stocks are absolutely ripping. So interesting with that dynamic as a backdrop.
Look at some of the telecom names, right? Like Verizon and I think AT&T's had a pretty good stretch. Like a lot of these names that have been dogs. That's sort of been a theme for the last several years, right? Toward the end of the year, these names start to pick it up because of a lot of, forced selling, tax loss selling. So, yeah.
You think that's something that we saw last year as tech continued to sell off into the hole into the end of the year and then picked up at the beginning of the new year? You think there was something there?
I would assume so. I would assume it plays a role. But yeah, you can never be sure. But given the level of tax loss selling across client accounts, right? I think that it has to play a factor.
I think it's an important thing to keep in mind too as we turn the calendar into 2024. It wasn't just last year, JC, or this year. Excuse me. So it was basically like Jan 1, everything changed, NASDAQ 100 bottomed, and these mega cap growth stocks started working. But when you go back to 2022, it was the same thing. It's like Jan 1, okay, they stopped working and entered a serious downtrend. So the last 2 calendar years,
was it that early?
Yeah, dude. Huge shift in trend literally the first week of the year.
Mm-hmm.
Go look at the charts. Go look at pull up the Qs and look at January 22, January of this year. So we'll see what 24 brings.
All right, Shane Murphy, always a pleasure, sir. Have a Merry Christmas, Happy New Year, and we'll talk to you again in 2024.
Miami, Syracuse in the fall. The date I don't think has been announced yet. It's probably after Labor Day, before Thanksgiving.
Awesome. Sounds like a plan. Thanks for having me on, guys.
All right, adios,
Shane.
I've always wanted to go to the Carrier Dome.
Why?
Strazza, have you been there for like a women's basketball game before or no?
Never been.
Why would you want to go? I mean, it's just a big dome.
It's like a famous it's a big deal.
I would love to go. I would love to go to a Syracuse basketball game. Love that at the Carrier
against UConn
with Boeheim.
Against UConn
team, really.
Yeah. No, you want to see an old Big East showdown is what you.
I was a junior in college, and I think we went to 4 or 5 overtimes against Syracuse. It was in March.
But that game was at the Garden.
It was a Big East tournament. Yeah. Oh my God, crazy. The rivalry that the Huskies and the Orangemen had back when I was in school was just wild. It was a lot of fun. A lot of fun watching those guys play.
Oh yeah. All right, let's do some headlines. We have actually a few to get through. So yeah. What? Nike. What do we do with you? Earnings were. It's not about the earnings, okay? The earnings were mixed, but it's about the guidance, okay? We are halfway through Nike's fiscal year, so they gave some full year estimates, and it wasn't great. They said that for the full year, they're going to see revenue growth of about 1% compared to the prior estimate of about 5%. They are dealing with soft demand pretty much across the board. And so that lowered guidance is the headline here. It is why the stock is leading us down this morning. We're
11% down today.
11%, yeah. It's not just Nike, of course. This is the reason Foot Locker is down and Dick's Sporting Goods is down and Under Armour is down. It's all Nike here. So
what about Lululemon making all-time highs?
Okay, they're not really peers.
They're not?
I mean, they kind of are, but they kind of are.
How are they not? Isn't it athleisure?
They don't trade together. Is really my is I guess my
because Lulu goes up and Nike doesn't.
No, they just don't. Lulu's more like luxury. I don't know, like luxury clothes. Nike's.
You seen the price of these shoes lately? Nike's pretty luxury, bro.
Look, all I know is that I don't consider them peers because they don't trade together, right? So, anyway,
Nike's also worth $100 billion more than Lulu. Lulu's like $65 billion. Nike's was $165 billion. Now it's 10% less.
They did identify. They said about $2 billion in cost savings that'll trickle through in the next few years. But the softening demand, the lowering guidance, revenue guidance for the year, is the headline here for Nike. So that'll be that. And do you have thoughts on that chart or not really?
It's in a range. It's messy as hell. It's underperforming. You know, if you're going and looking for stocks to buy, if that's the one that you're picking, you know, in my opinion, you're probably not looking hard enough, right? That's kind of how I look at it.
Yep.
In this
Right,
space, Lululemon.
Lululemon. New
Lululemon.
all-time highs, baby. Yoga pants for the win. Let's go.
That's the athleisure name you need.
Dude, yoga pants, man. Do
All
you
right.
own any Lululemon gear?
I don't know.
I've got some Lululemon yoga pants.
I don't have any.
I might have them on right now, actually. Do I have them on?
Show us.
I don't think these are Lululemon, but they're really comfy. Lululemon even for dudes, you know.
Yeah, they're killing it. They're killing it with the man.
It's not about Lulu anymore. It's about Athleta. I don't know who owns that.
Really?
Athleta's like the Fugazi Lulu.
Yeah, I thought it was Lulu.
Not what I hear. All right, fine.
We could check.
Pony up and buy the real thing, Spencer.
I heard that this Nike headline. Well, they were just giving a guide, right?
Yeah, it was a week guide.
Yeah, right. I heard that this means we're going to go into a recession next year.
Well, they're blaming the consumer for the weak guide. So I
thought to myself, well, that's what the market's pricing in right now. With 6 Fed cuts in 2024, aren't Fed fund futures pricing in a recession? How do we have 6 cuts and not a recession in 2024? I don't know. Something to think
what I
about.
don't get is who said. No one said 6 cuts. Like the market is saying that, but no one said that.
Well, the market never believes what the Fed is saying for good reason, because the Fed comes on and lies for good reason, right? So it's just a game.
Yeah, all right, fine, whatever. Okay. Anyway, moving on. If you want to see what else is down this morning, look no further than China. As they are wanting to do, they can just come out whenever they want and just said it before, say it again, kneecap their own industry, and that's what they did again overnight. So regulators announced new restrictions on Friday for online video games for like the 3rd or 4th time they've done this in the last few years. This is what the proposed rules would do. They would call for users to have spending limits on game platforms and would prohibit minors from tipping live streamers. They would also lessen incentives for players to keep coming back by banning game companies from offering rewards for daily logins. They would also require all computer servers and other equipment used by game companies to be located in China. So, look across the board. Tencent, NetEase, new Chinese stock.
Tencent lost like 50 billion in market cap while we were all sleeping.
Yep.
They came after Alibaba in a very real and hardcore way over the past 3 years now. Is Tencent next? They come after the companies with cash, by the way. It is actually a cultural thing in Asia. They don't really love how much time is spent gaming, right? So that's where a lot of this stuff, like these regulations might sound crazy, but it's a cultural thing. Like they're not happy that so many hours are spent gaming, the government.
Yep. Yeah.
They could be training for the Olympics or something, you know?
This is like the 3rd or 4th time they've done something like this just for this industry.
Yeah, ping pong. Table tennis.
So anyway, like I said, Tencent, NetEase, any Chinese streaming or gaming platform, which is most of them, frankly, Bilibili is down 10%, but even, you know, they're hitting all of them too. TAL, which has nothing to do with this, is down 9% here. So across the board.
Here's the thing. There are some stocks in China. Spencer, you just threw out TAL. I'll throw out VIPs, PDD.
How was VIPs doing?
Tencent Music, TME. Okay. These stocks have held up tremendously well.
Tencent Music looks great.
Not this morning.
This morning, just generally speaking, has acted very well.
Go look at the indexes, the Chinese indexes, FXI, KWEB, any of them, the Shanghai Composite. You want to go look at local. These stocks look really, really good, especially compared to, you know, what most stocks in China are doing. If China as a group can ever find a floor and just stop cratering, some of these stocks are going to be monster winners.
I mean, at what point is this just punishing communists for being communists? There's got to be an element of this.
They're doing it to themselves.
No, I know, but investors are the ones making the decisions to not buy these stocks. Let's remember that. So, you know, is it like, I don't trust these commies? I'd rather be in other types of, right?
It's exactly what it is. Yeah, money votes. Right? Howard, go check out Howard's blog. He wrote an awesome blog about it yesterday. Right? Like capital markets have a tremendous way of doing that.
Yeah. If you're going to be an asshole, you're going to be punished for it.
Yeah. I mean,
Money talks.
I'm sure you can go look at the valuations over there in this country where they have all these monster tech companies. So they should have a very high, average PE multiple. I'll bet it's close to single digits at this point in China because you have to discount and haircut these stocks because of the geopolitical risks that come with them.
So it's cheap, huh?
Yeah, right. Cheap.
I'm not looking to short China.
No,
I am looking to buy China. I haven't yet at all. But I'm interested. I'm interested.
Okay.
Me too.
Yeah. Fine. A couple other headlines. Another M&A deal in healthcare and biotech. Bristol Myers Squibb is paying a nice premium for Karuna Therapeutics, $14 billion in cash. That comes out to $3.30 a share. It's a nice 53% premium to yesterday's close. So BMY again is the acquirer. It'll trade down on this headline today, but I think that's their second or third acquisition in the last couple of months. So anyway, the company they're acquiring, Karuna, they have an experimental drug for schizophrenia, in case anyone cares. And Rocket Lab got a $515 million government contract, RKLB. That is why that stock is trading up this morning. And that's pretty much it on the movers and news here.
We've talked about it a lot this week or since the FOMC last week on all of our shows. These metals stocks continue to rip. If this is not the right tape for gold to finally break out, I don't know what is. I have a confession to make. I did buy some silver miners this week.
He was texting me about how he's YOLOing the AG. Also, I want to point, and then to Strazza's point, if gold can't break out here, it's never going to break out. Everything's going up, obviously. The dollar's down, real yields are down. Like, there's no excuses. No excuses. If gold can't rally now, like, this thing just sucks forever.
This is it for gold. I think it's going right here.
Speaking of sucking, let's look at the slide 2 here. This is the volatility index overlaid with the Mexican peso, which for those of you following along is making new 4-month highs today for the old Mexican peso.
Is the peso the new zloty?
No, the peso and the zloty have really been great.
Zloty is the new peso.
No, Spencer's right. Zloty's the new peso, exactly. The peso has been a great indicator for a long time. The peso and the zloty bottomed out at the exact same time. So new highs in the peso. I think the zloty's following along with it.
Got it. Okay.
Yeah, Spencer's right.
Hey, look at that.
I'm just asking questions here.
Oh, I gave you the answer.
Great. Metals and mining, silver, aluminum, gold, everything within materials, absolutely ripping. So over the trailing 5 days, aluminum index is up 10%, silver's up 7%, chemicals 6%, paper and paper products 5.8%, coal 6%, steel 5%, gold 5%. You go right on down the list. These are the leaders right now over the super short term. So I think that's interesting because we've been waiting for materials to start working. So I'm a little bit excited. We're running scans internally on all
small cap materials, new all-time highs this week.
You're going to love this scan we put together yesterday. You're going to love this scan.
All right. There was one more headline that we didn't get to because I saved it for the hot corner. You want to do that one?
Please.
All right. We have another interesting transaction.
Can we do?
So hot right
now. Ooh, Uncle Warren's at it again. $312 million.
Can you stop?
Stop what?
I was going to say a funny thing, and you just.
Sorry, Strazza. All right, go ahead. Sorry, I apologize.
So I'm going to pretend like we just started the segment.
Okay, ready? Okay, go.
Okay. So a lot of people might be off for the holidays. We talk about how volumes are light out here these next 2 weeks. Not for Warren Buffett. He's working $1 billion since last week into the Oxy, right where we expect him to buy the Oxy. I think he bought a little bit higher than, or a bit above what we call the Buffett zone for this purchase, but $1 billion, just about, since last week. Not nothing. Still buying this thing. Throw up the table, Alfonso. The Oxy purchase table.
Oh,
Zoom it, Spencer. There you go.
I mean, been buying this thing consistently for going on 2 years now.
You think he's doing that because he thinks the stock goes down?
No, this tells you a lot about the kind of investor that Warren Buffett is, right? This trade or this investment has not worked for him at all, but they're still just plowing money into it at their level. I mean, they seems like they believe in Oxy long term, and then that would, by extension, they believe in oil and gas. The hell was that?
what the JC?
What?
I knew that was you.
I like the drums. But yeah, so Uncle Warren's out here defending this level again. He is the support in this stock. $60. Do we have the chart? Throw the chart up.
Yeah.
So
Are you buying it, Strazza?
Still not a top. I'm not. I put some rig calls on against support like 2 weeks ago. They're kind of working. It just still doesn't excite me. I'll buy this when it breaks, when it resolves the range higher. There you see it.
Man, look at this range. You're going to get a monster move at some point, and if Uncle Warren has got it right, it's going to be higher.
I mean, this has been dead money the whole time he's been buying it.
You think he feels weird buying stocks without Charlie? You think he misses Charlie?
Oh, that's so sad.
I know. It's a little bit sad, right?
Yeah, why'd you have to go and say that?
It's something I'm thinking about.
Yeah, I had the same thought. It's like, okay, he's still out here working. Yeah.
Like if I get hit by a bus, and you're YOLOing something, are you going to be like, oh, I wish I could text JC and tell him that I'm YOLOing this gold miner?
That's like losing your wife, best friend. Like they were homies, man.
Yeah.
Can't be easy. I do own Valaris warrants still.
I like some of these Latin American commodity stocks. I really like the fact that we're focused on Latin America coming into the year,
And if I could just speak on the Oxy warrants quick, because some questions in the chat. We were very involved in the Oxy warrants. I don't know if JC still has some. I've been
I got
a year and a half now. It was a great trade. We bought those warrants when they were very, very much out of the money. So there was a lot of juice there, right? They're no longer out of the money. I think they're pretty much at the money right now, which is why I actually got out of them and into the Valaris warrants, because I wanted out of the money warrants in the oil and gas space, and Oxy was no longer that.
I have approximately 4% of my portfolio, my long only portfolio in energy, roughly, because that's
a lot.
That's just what it is. For my long only stuff, I got about 4% energy, right?
Is that because you're in the S&P?
Not exactly, but kind of, right? Yeah, it's not exactly the S&P. It's kind of like a fancy strategy that tax loss harvests a shit ton of money every year.
So you're probably in the big boys, the Chevron, the Exxon, Conoco, right?
Schlumberger, yeah, probably.
Make sure that they have you in the Cheniere. Get some nat gas exposure in there.
Dude, I don't manage that portfolio. I let the robots do it, man.
You don't bother them at all? You're not like, hey, I don't want Walgreens.
No, I'm not that kind of client. I got enough going on. If I don't want Walgreens, I'll just short it, Yeah, I got enough going on. Anything else stand out in the old hot corner? What about the new core? 176,000 Piker purchase.
We broke that news live on yesterday's show.
It's a Piker purchase.
Yeah, it's fine. Listen, it's where it's happening, right?
Yeah.
To see an insider come out and buy a breakout, that's awesome. We saw in the Merchants Bancorp, MBIN, like a month ago. Look at what that one's done since that insider came out and bought the new highs. It's been up like 30%.
Yeah,
really right. So it's where it's happening. And the reason I say that is because ordinarily we see the complete opposite, which is these insiders jump in and buy, heavy weakness, and they buy sell-offs, right? Buy a breakout, that always stands out.
Yeah, no, you're absolutely right. Couldn't agree more. It's a great point.
And the Dollar Tree, we've given these dollar stores a hard time here this year, but this is a really big purchase. Nothing new. This fund, Mantle Ridge, they already own about 6-7% of the outstanding shares. So they did file amended D with it. but it's nothing new. They already own billions of dollars of this company. So just adding here.
Can you throw the long-term chart of this up?
Steve, we are not giving the dollar stores a hard time. The dollar stores are giving themselves a hard time.
I don't know what, I mean, look at this chart. Throw up slide 2. What is it that you're giving them a hard time about? Seems like they're doing everything right.
I went there for like wrapping paper and stuff, like Christmas stuff. You can't walk in our Dollar Tree. Like you can't get around.
I was looking a little more zoomed in because, you know, we're talking about breadth here, relative strength.
And sorry, Spencer.
This thing's a beast. What's your beef?
I'm boots on the grounding. Also was at Ross Stores and was appalled at the mess in there. That one's at new all-time highs. Ross Stores, we almost put a long idea on this one yesterday. There's just too many, though. It's too many. Have you noticed the scans are blowing up, JC?
Is that something you see in bull markets or in bear markets?
So many stocks, so little time. I had to cap it the other day. We had like 10 setups in the 2 to 100.
It is official. Dollar Tree is a consumer staple, not a consumer discretionary stock.
For sure. For sure it is.
Why for sure?
Because you think about like the people, like a lot of people use them as like de facto grocery stores.
Walmart's a consumer staple.
I wouldn't buy food there. That's okay.
Costco also consumer staple.
People do that. Yeah, dollar stores are staples, no doubt. Maybe that's why it stinks this year.
Target is also a consumer staple.
Yeah, I mean, yeah, sure.
Honestly, if you compare Dollar Tree to staples, I mean, this thing is an absolute beast. So is Costco, I guess. So there are consumer staples that are working just fine in an environment that consumer staples are getting hammered.
Yeah, that's true.
Just keep that in mind.
All right, let's look at it. There's a cool chart I saw on the chart of the day. So let's chart report. So let's look at that real fast. I want to give a shout out to one Christian Fraunhert. He had this good table. I was actually thinking about this the other day.
The Mag 50.
The Mag 50. Yeah. Although slight bone to pick with Christian here. This table, which shows all the stocks in the S&P 500 that are up 50% this year. Uber is missing from this list. So got to update that. But other than that, yeah, the Mag 50.
You've been hanging around Strazza too long.
Me? No. What do you mean? Uber's in.
That Uber's not on the list. That's something.
No, Uber's in the index.
Now.
Anyway. Yeah, now. Whatever. Fine. Who cares? Anyway.
Can you get Christian on the show? I don't know why he hasn't been on the show.
Yeah, the timing isn't great. Like he's doing his own thing. He's busy at the Open. He's got his own thing at 9. So timing is.
We'll get him in. We'll make it work. We'll get him in like at 8:35, 8:40. We'll get him in.
All right. I mean, I'll keep trying. The timing. I love Christian. He is one of the nicest guys on Wall Street for sure.
We DM each other.
I'm sure he's great.
How about them cruise lines?
I know.
Are they Texas
cruises?
I was trying to. A buddy of mine was trying to convince me to go on a cruise with him, and I said no. But
imagine being stuck on a ship with a bunch of people that look like they're hanging out in Times Square or Disney. Can you imagine?
No. There's a time and a place for sure.
I've
got nothing against cruises.
Oh, just pick an island and go there. Why do you need to go to 7 of them? And you got to be back on the ship before dinner time, and you got to eat the shitty food on the boat instead of eating on the island, which is the one that you're visiting. It's ridiculous. I can't.
Oh my god.
I can't.
All right. So we know how JC feels. The market.
And these cruises are expensive, man. Imagine paying to be there with all these.
No, you know what though? There are a lot of good deals to be found, JC.
Yes.
Doubt it.
No. You don't even have to look very hard. They're out there.
No.
I was gonna do one during the pandemic. Remember?
It's like all you can eat.
I looked, Steve. I looked. I'm not gonna lie. I looked.
It was like $400.
Yeah,
dude. If it's all you can eat, these all-inclusive places, the food sucks. The drinks are gonna make you feel terrible. Like you can't do it.
Look, I mean, the time and the place. I've been on a few cruises. I think cruises are fun, but I totally get If it's not your thing, I get it. I get why.
Don't do it. Don't do it.
All right, fine. I like cruises. That's all I'll say. Anyway, a lot of stocks to like this year in the S&P. It's not just 7. You know this. We know this. Everyone knows.
It never was, right? You guys following along here.
No, it's a
Know that it was
math
never
thing.
7.
If you're going to say 7 stocks drove the vast majority of gains for the S&P 500, that's fine. But just based on math, that's how it works, right? That's okay to say. To say that only 7 stocks were going up in the S&P 500 is a different statement. Do you agree?
Yeah.
I am going to continue to bet that humans are going to make poor choices.
How about number 11 on this list? FICO. First off, shouldn't that be a financials?
It is.
No, it's probably an industrial.
They have it as a tech stock. Yeah, that's fine.
Look at FICO this year.
It's a software stock.
It's really
Holy
good.
cow.
Based out of Montana. Did you know FICO is based out of Bozeman, Montana?
No. FICO is the only name on the top of this list that really jumps out. That's a total shocker to me.
You know that FICO stands for Fair Isaac Corporation?
Yes.
Yeah.
Wow.
Bozeman, Montana.
Fair. Look at that. That's a fun fact. FICO stands for Fair Isaac Corporation. Who knew? Spencer, apparently.
Inventors of the FICO score.
That's
what
they're known for.
Figured as much.
Right.
But not a financial. But JC likes to always agree with the index or sector classifications.
That's not true. That's not true. I think pot stock should be consumer staples.
No,
Stock market goes up, recession, people are still going to smoke weed. Like, why
what
is
you meant to say
pot
is
stock not
that
a consumer staple?
JC lives his life by the GIC sector standards.
Yeah,
right?
yeah. Listen, you say some provocative things on here, but Tesla is not a tech stock.
It's not. It's consumer discretionary, bro. They make cars. I don't know if you heard.
All right. Okay. Enough of that. I've got better sounding.
It's our Christmas special. We're playing music. That is an Eddie Elfenbein stock. Absolutely. He's in a lot of these financial.
I was going to tell Eddie that he should come on the show, and then we'll work together to come up with what stock he should buy for his ETF. By the way, Eddie's ETF crushing the market this year.
Hey, that would be fun. Ask him
be
to be on his selection committee, and we'll let him on ours.
How many fucks do you think he gives about our opinion?
0. Eddie, line go up. Buy this one.
I love Eddie. He is the man.
Right.
He is the man.
All right. I got nothing else. Let's do some recess.
All right, do a little recess. My grandfathers grew up in farms in Cuba. So when it comes to like farm stuff, I did not grow up in a farm. So they would, pass down some lessons. When you roast a pig, right, and you're smoking that sucker, salt only salt, right? You don't need
salted pork.
You don't need to get cute with like these Cubans are crazy, man. They're sticking vinegar in there and oranges and garlic. They're putting so much shit you can't even taste the damn pork. The lesson that I learned from my grandfathers is that we as humans have an appreciation for the flavors of animal protein, and if you're going to dilute that with such things as fruit, you are depriving your evolutionary self from these natural animal protein flavors. So only salt, which is going to enhance those animal protein flavors, only salt.
No arguments from me.
I got Gahachina. Alex knows.
I will be as a Jew does on Christmas. I will be going to the movies and eating some takeout Chinese food.
I love that. You need to find some Cubans or some Puerto Ricans or some shit to hang out with on Christmas. That's the move in Miami. There's always Jews infiltrating the Cuban like Nochebuena.
Oh,
I didn't
That's
know
smart
that.
though. That's intelligent. Jews should be infiltrating because Nochebuena for Cubans, Nochebuena, the Christmas Eve is more important than Christmas. The party is better on Christmas Eve.
Oh, that's interesting.
Yeah.
Anyway, I'll be going to see that movie, The Iron Claw, about the wrestlers. I'll let you know. I've heard amazing things about it, and so should be a good time.
Wrestling's still not real.
Yeah,
Okay.
but I've heard good things about this movie, so gonna check it out. Movies and Chinese food, a tradition unlike any other. What do you got?
Find yourself some good Cubans.
I did that on Thanksgiving this year.
Steve, you have anything for your Christmas?
No, just Merry Christmas, Happy Holidays, everybody. You know, I will be bundled up in my bull market robe. It's cold down here in the Florida Keys. Actually heading up to Florida.
It's cold. It's like 65 degrees. It's cold.
It's been freezing. Yeah.
Mm-hmm. Yeah.
Santa Claus rally off to a nice start.
Tesla's a tech stock, guys.
All right. On that note, we are done here for the day.
Trade like a tech stock.
Thanks to our guests. Thanks to Shane. Thanks to Louie. We are going to be doing What the Fic today, but it's not going to be live, so it'll be uploaded to the channel later on in the day. Check back for that. We're off on Monday. Don't know if you guys knew that, but the market's closed. It's kind of a holiday. So we will see you all on Tuesday. Have a Merry Christmas. Enjoy the weekend. And go make some money.
Adios.
Bye, everybody.
Run it. I can't take no loss. I don't even know what it